Let's move on and let's put the spotlight on Jana Small Finance Bank. And for this, we are being joined by Mr. Ajay Kanwal, MD and CEO of the bank right now. Hi, Ajay. Good morning. Good to be speaking with you. Firstly, let's begin with the latest update on the bank, wherein RBI has granted license to act as authorized dealer category 1. Tell us more on how this will impact the overall business growth and how will this open the new scope of income for your business.
So good morning to you and all the viewers. So AD1 license really helps the bank do more work with MSMEs who really want LCs, who want packing credit. It allows us now to open our own Nastro, helps get FCNR deposits, so non-resident business will get a boost. So really areas that we can bring down costs for our customers, we can open new products for segments we have been serving, but these products have been missing though they start out. So I give you two examples like LCs, packing credit, more work with FCNR. I think those will be the kind of things, prepaid Forex cards. So I think all those things become much easier for us and really motivate us to now do that.
Interesting. Ajay, morning. So if I pick correctly from your previous comments, you had said that MFI stress has bottomed out. With most of the Q4 now behind us, what's been the read-through of the overall MFI landscape?
So first, I always keep saying this, we are 70% secured and 30% unsecured. So yes, it has not been a big challenge for us. I also would like to remind everyone who watches Jana stock or our bank's progress is that we had committed that we will turn 80% secured. So we are moving on that journey a bit faster given all the challenges in the MFI piece. On the MFI book, we really had seen the challenge peak out in Q2 itself. So Q3 has been better, and that's in the results. Q4 tends to be slightly better, not significantly better. The only reason it's not significantly better in our head is we did see a small amount of slowdown in Karnataka. I think that is stabilizing. So we certainly should see a better Q4, but not significantly better. And then Q1 onwards, more steadier. I just want to say one thing, see, the MFI business model is not the same it used to be in the past. So we all have to get used to a bit more elevated delinquency and slightly heavier credit cost in that business going forward. So that is a model change, so to say. But having said that, it's a very profitable and very inclusive business. So we certainly are focused on it.
Because you've been cautiously slowing down your unsecured book also, right? And you aim to then achieve the business mix of 80% secured loans earlier. Firstly, Ajay, by when do you expect to achieve this mix? And secondly, what will drive up NIMs if the shift is now going to be from high-yield unsecured loans to secured loans?
Right. So, few things. One, we wanted to turn secured because it's a public depositing institution. We wanted to make sure that we really have a very healthy asset book. So that was the primary reason. Second, we did feel there's a lot of gap in things like affordable housing, in things like businesses borrowing 7 lakh, 10 lakh rupees, where they really are happy to pledge their shops or offices or homes. So the micro lab piece, the MSME piece. So we saw a market opportunity. We did want to do property back because property is the most resilient asset through any economic cycle. And thirdly, of course, it is right for every bank to be as secured as it can, and that's in the best interest. So that is the first piece. And you rightly said, as you turn secured, your margins will get lower and lower because secured business provide lower margins. See, for us, the elephant has already passed through. So from nearly 0% secured, we are at 68 as of December. We were at 60 in March. So you can see the progress from 60 in March 24. December 24 is 68. So it's a very continuous and steady movement towards secured. But 0 to 68 already, our NIMs are down to about 7.7. It used to be at 8% in March. So, but I think, we have done a calculation of NIM. As secured moves from 68 to 80%, another 50 bips, now no more 50 also, now about 30 odd bips left in margin squeeze. CASA will move up to 30, so that will kind of answer it off. So we don't see much drop in NIMs. See, the good things about NIMs is our secured NIMs from March 24 to December 24 are absolutely what it was. So we have not seen a secured NIM compression. what you've seen is change of mix, which is as you turn from 60% secured to 68% secured, NIMs have come down. So with the last 12% to go. We had indicated earlier that we would do it by March 2027. It may end up a bit earlier because this year the unsecured book has actually gone down by 11% as of December. So we have seen a drop in our unsecured book, which was not planned by us, but given the nature of the MFI performance, we have decided that, listen, let's just kind of step back before we kind of see things settle down. So which is why the secured has gone up much faster. So yes, before March 27, now much earlier, and we'll see what happens. A lot depends on how we come back into the MFI business a bit, but you're right, we never grew it. Our CAGR on MFI business, since the day we began the bank till December, for roughly a 3/4 of a year, has been like 1.5% CAGR. We have never grown it very hard because we are strategically in our head very clear. We have to be a secured bank, and secured will be primarily property.
Ajay, for the last 2 quarters, you have always mentioned that you are focusing more on recoveries. Now, the last quarter, you reported around 300 crores in recovery. Help us understand that will it continue in Q4 FY25 as well, or can we expect a better number from that 300 crore what you reported in Q3?
So I must tell you that, customers, even if they are economically not doing well, they tend to remain really honest. We still recover, our provision amounts from 2016, and they are meaningful recoveries. We still do a crore of rupees odd from 2016 book, right? And these are individual customers paying us small balances. So recoveries in our business is always continuous. I can't give a signal really on will it be higher or lower. I can just say that, listen, if stress will reduce, the chances that recovery will improve is higher. Because, people are now getting out of that old mode of, things got very constrained, people pulled back, customers were not sure. I think it's much more settled now. So I think in every settled moments, recoveries get better because everybody wants to settle their challenges. So I do think that not just for Jana, industry in general, every quarter should show an improvement, is my view.
So Ajay, you've always maintained the stance that your bank will apply for universal banking license in May 25. Last quarter, you proved with numbers as well. So can investors certainly expect the bank to now report NPAs much lower than what it was in Q4?
So our December numbers was gross NPA was about 2.7ish and net NPA was 0.91. If we continue maintaining the same trend in Q4, then we certainly are eligible to apply. I again would like to say our eligible to apply is then, of course, to our regulators' decision whether they award us a universal bank or not. And certainly we are working towards that application in May.
All right, Ajay, with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us this morning. Thank you so much.
Thank you.
If you like this video, then like, share and subscribe to ET Now.